Today, we're talking about something that doesn't often cross your mind, but it's incredibly important when you're trying to leave a lasting legacy, and that's estate planning. In today's video, we're talking about effective ways in which you can reduce your estate liability. Hi, my name is Yolanda. I'm a wealth advisor. It is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. If you're new to the show, please consider subscribing if you're finding value. And also, please feel free to share this video to friends, to loved ones, to other family members that might need this content as well. It will just help me reach other folks like you that need to know this information. I produce content about finance in South Africa for local South Africans and expat South Africans as well. So, estate duty, what is it? Well, I call it a death tax. Essentially, death taxes are a whole bunch of money that your family has to pay when you pass to a whole bunch of different people. And if you don't plan for it, a significant chunk of your wealth that you are planning to leave to your heirs, your children, your spouse could go away to settle these costs instead of passing on to your heirs. Don't worry, I'm going to give you some strategies today that you can utilize to ensure that we're keeping the death taxes low and to ensure that your hard-earned wealth is protected for the generations to come. I know it sounds strange, but the first tool that I want you to consider when it comes to your estate planning is retirement annuities. Now, you're probably thinking, Yolanda, we're talking about estate planning, not retirement planning. But yes, I said retirement annuities. So a retirement annuity in South Africa is an approved retirement fund by the Pension Funds Act. Now, this product offers several tax benefits. And when you contribute towards an RA, you are using pre-tax money. And I know there's a lot of comments when I put out retirement content is, why are we being taxed on money that's already taxed? Your retirement contribution is pre-tax money. You're not taxed on your retirement contributions. Not yet, anyway. So using a retirement annuity, you are contributing pre-tax money into this RA. The money that's inside of this RA grows free of any capital gains tax, free of any interest, free of any dividend withholding tax. All right, so that's all of that tax-free growth that happens within your retirement annuity. And you don't pay income tax within any of the growth that happens inside this investment. The best part about the RA, the funds inside your RA do not form part of your deceased estate. This means you do not pay estate duties, you do not pay executive fees on your retirement annuity. So the RA can provide ongoing tax benefits even after you pass, ensuring that your loved ones receive the maximum financial benefit. But the key thing to know is while you can nominate beneficiaries in your retirement products like your pension, your provident, and your retirement annuity, it's the trustees of these funds that determine where your money goes, particularly when it comes to minors under 18 and people that are dependent on you. Those individuals will take priority in the distribution. The second tool that you can use to reduce your estate liability is life cover. And under Section 4Q of the Estate Duty Act, any assets that you leave to your surviving spouse is deducted from your gross estate value and is excluded from estate duties. So by naming your spouse a beneficiary in your life insurance policy, the proceeds will then bypass the estate and be paid directly to your spouse, meaning no estate duty and no executive fees. If you are leaving life insurance to your children, including minor children, that portion of the life cover is estate dutable, although it will be paid directly to the beneficiary. The bonus tip here is that you can take out specific estate planning life cover between you and your spouse. It is a very underutilized tool in the insurance and financial planning industry, but it has a lot of benefit for clients. By taking out estate cover, you cover your estate duty liability, and this ensures that any of your other assets are not sold to offset these costs if you have not made sufficient provision for cash in your estate. The next thing is trusts, and one video I want you to watch of mine, I'll link it up in the show notes, is my wills and trusts video that we did with an attorney. That'll give you a lot of insight into trusts in South Africa, but that's a great way to reduce your estate duty liability. How does it do that? Specifically here, we're talking about an inter vivos trust. This will house growth assets, things like property and businesses within the bounds of the trust. By doing this, the growth of your assets takes place within the trust and not on your personal capacity. And this will reduce your estate duty liability. However, once you sell an asset to the trust, it belongs to the trust and it is subject to control of the trustees. So it's important, should you choose to use a trust as a tool in your estate planning, you gotta be very thorough in vetting your trustees, and you need to clearly state their mandate in the trust deed. That being said, just know that whenever you see my videos online, my audios online, my podcasts, etc., anything of mine that you see online is not financial advice, although I am a fit and proper South African financial advisor. These videos are for educational purposes only. It's there to spur on your thinking and think, how can I utilize this in my financial plan? Is it for me? Is it not for me? And it's great talking points to take to your financial advisor. All right. That's financial education. Now, if you need financial advice, speak to your financial advisor. If you don't have an advisor, you can click the link where you're watching this video. I'll be happy to talk to you one-on-one and see how we can incorporate elements of what I'm talking about in terms of estate planning into your financial plan. Please do not act on any of the elements that you hear in this video. Do not act on it as financial advice because it's not. Another very effective tool in reducing your estate duty is by using donations tax. Every financial year, you as an individual South African, you can donate up to 100,000 Rand tax-free to anybody except your spouse, because donations between spouses are unlimited with your own spouse, not somebody else's spouse. All right. So if you're married, combined, the two of you, you and your spouse can make a donation of 200,000, 100 individually, into a trust if you choose to use one, to your children. All right. You don't have to pay the donations tax. If you donate greater than 100,000, you are liable for that 20% donations tax. It's your duty to declare it. Okay. If not, the taxman is going to either come after you or the beneficiary. So make sure you're doing and declaring your donations as part of your e-filing tax submissions. By making those donations and utilizing the donations tax, you can contribute to the trust and make sure that the growth of those funds or assets remain within the trust out of your personal liability. Another key thing to remember is that once you donate to the trust, it's no longer yours. Okay, it belongs to the trust. So only use money that you have as extra, not money for your living expenses, because you can't go back and take that money out of the trust. Okay, you're going to have to sit with SARS and explain what are you doing and why you're doing it. You could get into a lot of trouble if you're doing that kind of thing. Use your additional funds, the discretionary funds. So these are just a few ways in which you can reduce your estate liability and protect your wealth for the future generations. If you need help with creating an estate plan or any of the specific elements that I have spoken about today, please feel free to reach out. Click the link where you're watching this video. You can book a complimentary 15-minute session with me. We can chat one-on-one. I'll answer some of your questions. And if you need more in-depth planning, I'll be happy to help you as well. If you want to know more about estate planning in South Africa, be sure to watch this video.